All right, here's one that we did not too long ago. This was on Amazon, okay? So just gonna show you how controlled this was. So new Amazon long was traded at 181.30, says daily cycle low retracement. So it came down here and it retracing off of a, it was retracing off a moving average. So set this out, and this was doing this condor right there. So the 182.5, 185, and then the 192.5, 195. So it looking like that. All right. And so then we did an adjustment. We widened the spread out. So we can do a lot of different things. But anyway, I won't spend much time. And then we ended up here on the 20th. Now it was trading at 190. Okay. So now we have the adjusted butterfly. We widened out the spreads here. So we're in like this, and we widen it further out to give us more room to the upside. Okay. So this one worked out great. We were up over 150 bucks, 106% return. Okay, on the trade. So you can see these returns are big because we've lowered our risk. So here's where we set the trade up right there on the 11th. And then we started getting a pop and a move here. We were targeting this area in this area here. This was a 786 retracement area. All right. So then it was trading out to 189.97. So here was the trade that we ended up, and we had this a different trade, and then we adjusted it to make it wider. So we ended up having the 182.5, 185 call debit spread on. All right. So we had that on. And then we had on the other side of that, so the $2.50 wide spread there. And then we had, that was this side. And then we went out, and you can do these all at once or you can leg it. So then we sold the 195, 197.5 call credit spread right here. Okay. And that gives us what we call as a condor. So instead of just having the debit spread, we reduced our risk, reducing our theta. So we had this at potentially the 96 bucks was our max risk. So if it went out here or here, we did nothing else, we'd lose $96 per spread. But if it goes out inside our spreads here, this makes 154 bucks, which would be 160% return. All right, so great controlled risk trade for when we want to get that risk more defined. So here it went out right in the middle, and this was, right perfect where we wanted it. So it went from 181.30, now it's trading at 189.97, right in the middle of our spreads. So we're long that 182.5, 185 here, and then we sold way further out. We sold the credit spread here, 195. 197.5. So we had a big wide spread. Okay. So total risk of 96 bucks, max profit 250, $154 per spread, 160% return. So that is an example. And these are all spreads that I'll use, and that we'll use, in the alert service or just in the trade room for the different market conditions.